Adani Power is a 3.2 lakh crore company. Okay, that's the current value of the company. And this is the share price history of the company. Okay, you can see there's a massive jump, but I'm not going to focus on that right now. Focus on this around April. Okay, consider January 15 or April 16, right? This era. You see the price of one share is 5 rupees, 6 rupees, okay, 11 rupees. And then you go all the way to January 2020, December 2020, you see it's around the same range. So for 4 years, 4 to 5 years, Adani stock basically, despite some fluctuations, remained at almost the same levels. Now, remember 2016, 2015, 2021. These are the profit and loss of this era, okay? Profit and loss of this company. The top number is the sales. Take a look at the sales from 2016. 2016 sales are 25,377 crores. We move all the way to 2021, we see sales of how much? 26,221. Wait, from 2016 to 2021, sales have remained almost the same. Then you can look at the operating profit. Operating profit, 8,802 crores, 2016. 2021, 8,688 crores. Almost the same. However, what happened? Post 2021 was a massive surge. Look at this, 27,000 crores, 38,000 crores, 50,000 crores, 56,000 crores. And what happened? Look at the price. Where is the price? Yes, the price then boomed. See, 2021, 2022, then we see all the way 2025. So, prices, the share price, it boomed, right? Because, of course, the massive increases in the revenues and profits. Of course, investors would like to see a massive increase in earnings, a massive increase in profits. What caused the rise in revenues and profits? So, in 2016, the total capacity, electricity generation capacity, was 11,160 megawatts. Okay, 2016. 2022, see, 2022 was 13,650 megawatts. Only a 20% increase. See, only a 20% increase. Now, this is 2022, right? Let's go to 2023. It's loading. Yes, 2023, it increases 15,250 megawatts. So, a 20% increase in 1 year. Electricity generation and revenue also increase a lot. Then let's move to 2025. Okay, it's loading. Why isn't it loading? Yes, 18,150 megawatts in 2025. So you can see from 2022 all the way to 2025, there was a massive increase in capacity, leading to the massive increase revenues, in revenues that we saw here. The top line is the revenues, and you can see operating profit. This black line is also increased, and that maybe could have led to the massive increase in the share price. Now, why is this relevant? It's relevant because we want to ask if Adani Power can replicate that performance. Because you see 18,150 megawatts capacity by 2032, the company wants to expand or is planning to expand by 2032, 41,870 megawatts, more than double the capacity. I can use my calculator, but it's too slow. So more than double the capacity, electricity generation capacity by 2032. That's what the target is. Operating capacity plus the log in capacity they're trying to add to reach the target capacity. Now, here are the current capacities, right? The blue ones, you see blue ones, these blue numbers mentioned are the current capacities. And I believe the orange ones, this orange and orange, are the things being added. So you can see the logged in capacity, we are going to expand. So you can see a diverse number of power plants with a massive one at Mundra. See Mundra 4,620 megawatts, but you can see a diverse number of locations in which the plants are. Okay, the plants are. Then what else can we see? Yes, so the company has had A return on capital employed, a very nice 22% in fiscal year 2025, return on equity of 25% in fiscal year 2025. So very, very nice return on equity numbers. Then in quarter one, hold up, yes, in quarter one, fiscal year 2025 or 2026, it had a net debt of 4,376 million, 437 crores. That is not total debt, that is net debt, meaning total debt minus cash and the cash equivalents of the company. Okay, let's move on. Then some important highlights. Okay, they have the highest EBITDA margin in the sector. 38% was the EBITDA margin in fiscal year 2025. That is the highest EBITDA margin in the sector. So could they be the most profitable in the sector? I guess so. They can be said. They can be said. They have a strong case, at least by the EBITDA margin. Then 92% land availability for the power plant projects they want to make for the 23,720 megawatts they're adding. Okay. 69% of the upcoming capacity is brownfield, enabling faster execution. What do you mean by brownfield? Basically, there's existing power plants and they're going to add capacity to those existing power plants. So brownfield. Greenfield, greenfield will be making up a new power plant from scratch, from another location itself, a new location. But brownfield is adding capacity to some existing power plants that they already own. So it will be faster. Yeah, faster. It will be way faster. Then, uh, yes, coal is critical for India's base load power needs. Okay, strong growth potential as India catches up. So, what do we need to read? 4x power demand, 4 times power demand in the next 2 decades. Vision 2047, I believe, for India as a whole, India as a whole, 6,400 billion units of electricity will be the demand. Okay, installed capacity total will be 2,100 gigawatts by 2047. That's an estimate. That's an estimate. Now, look at this. By 2032, the additional coal-based capacity required by the country, it's an estimate, is 80 gigawatts. 80 gigawatts of additional coal capacity is needed. And Adani Power, according to the current project power line, they believe they can fulfill up to 30% of India's additional now needed coal-based capacity by 2032. So the capacity being added by 2032, 30% of that capacity added, not total, but added will be from Dani only, Dani Power only. So 23.7 gigawatts. And you can see this, you can see this PPA, purchase power agreement, as the name suggests, agreement to buy power. Right. PPAs awarded by state discoms, distribution companies, with pre-indicated coal linkages under Shakti policy. So Shakti policy, PPAs are being rewarded 11.7 gigawatt. See, 7.7 gigawatt of that was awarded to APL, Adani Power Limited. Total ones under Shakti policy, coal allocations, 30 gigawatts worth of power purchase agreements. 11.7 of them were with pre-indicated coal linkages, but 7.7 is going to go to Adani Power Limited alone. So you can see the massive, you can say, market share the company has. Okay, that very nice market position the company has. Then, then, the company has had a strong case of turnaround. Okay, turnaround or turning around stressed assets or assets which were bad. For example, let me move. For example, yes, in March 2022, they acquired Mahan Energen. Okay, let me zoom in. Yes, March 2022. Remember the massive surge in revenue from 2021, 2022 onwards because they also acquired a lot of distressed assets. So March 2022, a 1200 megawatt power they acquired, which had a $72 million of EBITDA in fiscal year 2022. In just 3 years, by fiscal year 2025, they increased it to $221 million in annual EBITDA. The acquisition cost was $330 million, but or the all the cumulative EBITDA, total EBITDA since acquisition of the company is $615 million. And they have prepaid, now they have paid the entire $330 million debt, and they want to have a target capacity of 4,450 megawatts from the current 1,200 megawatts for this. Similarly, we have Raipur plant. Here you can see $468 million acquisition, $1 billion of cumulative EBITDA made. Okay, they want a target capacity of 2,900 megawatts from the 1,300 right now. Again, we have Raigarh plant, 600 megawatts, 160 million spent, 373 million cumulative EBITDA alone, 2,200 megawatts from 600 megawatts. So that's the capacity by 2030, target capacity. But even now, they have made back the money in terms of EBITDA, more than made back the money. So they have a strong history in turning around companies. Then, moving on, this locked in growth. What is the progress for this 23,000 megawatts they're trying to add? Now, this is the total they're trying to act for the growth projects. Okay. Uh, Here is it. Yes. Yes. See, total 23,000 megawatts. You can see for land clearance, checking out your land, I think regulatory and land and all that. Almost, I think every project except like a couple, yeah, except one project, every other project has gotten, I guess, a land clearance. They've ticked on land. Equipment ordering, they've ordered equipments, and equipment must be coming for like every one of them. Environmental clearance, they've got for five, and stuff is in progress. Stuff is in progress. Then purchase power agreements. Now, for some of these, like a Mahan Phase 2, they've already gotten a power purchase agreement of 1,320 megawatts. So for some of these locked in projects of capacity that is coming, they've already gotten agreements with companies to sell power to these capacity expansion projects only. So you can see 2,300 is the one. 100% have got environmental clearance. 38% are still getting, sorry, 38% are still getting environmental clearance. 100% have gotten the order equipment ordering, and 7,720 have already signed purchase power agreements or in the process, very close to signing purchase power agreements. And last, the company has shown improvement in the net debt to continuing EBITDA. Lower this, the better. You can see a stark improvement. Net debt to continuing EBITDA was 9.79 times in fiscal year 2019, improved to a stark 1.78 times. Wow. And you can see continuing EBITDA in billions of dollars, $0.7 billion in 2019, $2.5 billion in June 2025, and 1.78. So that is it. These are the credit ratings. Double A. Yeah.